Well, in the final snapshot of the 2023 labor market, employers added 216,000 jobs and capped a year of steady gains. The unemployment rate also held at 3.7%. That's according to the Labor Department. And ABC's M. Nguyen breaks it all down for us.
The U.S. economy added 216,000 jobs in December, according to the Bureau of Labor Statistics, surpassing expectations in a show of resilience for the labor market. The unemployment rate remained at 3.7%. Economists had predicted a net job gains of about 170,000 for the month and for unemployment to tick slightly up.
It defies expectations, this job market. It refuses to slow down. We ended last year on a high note.
It's a strong final jobs report for 2023, where most positions were added in government, healthcare, social assistance, and construction. Wages were also up 0.3% over the month, in line with expectations, and 4.1% for the year, higher than expectations.
To give you just sort of a point of reference, we started 2023 at 3.4% unemployment. So we moved up a little bit, but unemployment now has been below 4% for nearly 2 years.
October and November's gains were both revised to show 71,000 fewer jobs than previously reported. This report crucial for the Federal Reserve as it considers cutting interest rates as early as March or May. The Fed raised rates 11 times since March of 2022 to try and curb inflation. The measure seeming to work, with the annual inflation rate continuing to drop after hitting the highest levels in decades at over 9% in mid-2022. Today's stronger than expected job and wage growth could prompt the Fed to hold off on rate cuts until later this year. Whether the Fed cuts rates in the spring also depends on the direction of inflation. Officials will be watching out very closely to the next inflation report, which is set to be released next week. M. Nguyen, ABC News, Washington.